Udah kali ya? Enggak.
Belum.
Ladies and gentlemen, may I have your attention, please? Our session will begin shortly. Thank you. Hello, good morning everyone. Assalamualaikum warahmatullahi wabarakatuh. Welcome to the JKN Muda International Webinar, The Implementation of Public Assets Insurance in Indonesia from International Perspective. To all participants, today's webinar will be conducted in English. However, it comes with an English-Indonesian simultaneous translation, so you can listen to the interpretation by clicking the globe icon just in below bar of this Zoom meeting, or you can also find the three dots icon on the right side of the bar. Select interpretation and then choose Indonesian. I am Lolita Rahmadian, your MC for today. I also would like to greet all of our directors, head of regional offices, advisor to the Director General, head of KPKNL, our distinguished speakers and moderator, and of course, all of the audiences who make your time to join us in this beautiful Thursday morning. Ladies and gentlemen, this international webinar is held in collaboration with DJKN Muda, the future leader incubator of DJKN. The main topic of today's webinar is the implementation of public assets insurance in Indonesia from international perspective. Before we begin the session, please allow me to set the context of this webinar. In the next 2 hours, together, we will discuss about, first, types and benefits of public assets insurance, and second, the implementation of public assets insurance in Indonesia from international perspective, any critics, suggestions, or best practices from other countries. Moving on, today's webinar will feature 2 speakers. The first is Bapak Encep Sudarwan, the Director of State Assets Policy Formulation, and all the way from New Zealand, we have Bapak Greg Fowler, the Crisis and Disaster Risk Finance Consultant to the World Bank. As our moderator, we have Bapak Fatur Berlianto, the head of General Affairs at West Kalimantan DJKN Regional Office, that will help us elaborate the main topic of today's webinar. Just a little housekeeping before we get started. Once again, I would like to remind you that today's webinar will be conducted in English. However, it comes with an English-Indonesian simultaneous interpretation. To listen to the translation, you can click the globe icon on the below bar of the Zoom meeting, or you can find the three dots icon on the right side of the bar and choose Interpretation and then choose Indonesian. Also, if you have any questions during the presentation, please type them into the question box in our Zoom chat box or slide the link in our link tree. The moderator will bring them up after the presentation. Or you could also raise your hand and ask your questions directly to the speakers. Ladies and gentlemen, we are now in the opening session. I would like to invite all of you to stand up as we listen to Indonesia's national anthem, Indonesia Raya. You may now sit as we listen to Ministry of Finance official anthem, Mars Kemenkeu.
Kementerian Keuangan Republik Indonesia, pengelola keuangan negara, berdiri teguh bersatu padu demi kemakmuran negara. untuk capai kesempurnaan. Kementerian Keuangan Republik Indonesia, pengelola keuangan negara. Kita satu dan terpercaya, bergerak bersama wujudkan Indonesia Jaya. Indonesia Jaya.
Ladies and gentlemen, the next agenda is Keynote Speech from the Advisor to the Director General for Stat Assets Optimization Affairs, Bapak Yose Arif Lukito. To Bapak Yose, the screen is now yours.
Thank you, Mbak. Okay, good morning, everyone. Good morning, our distinguished speakers, Pak Ancap Sudarwan, Director of Asset Policy and Formulation, Direktur General of State Asset Management, Pak Greg Fowler, Director of Risk Financing Solutions, and of course, our distinguished participant, all directors, head of regional office, and head of operational offices throughout the country of the DGSM, and also World Bank team, all friends and all staff from DGSM and from our partner stakeholders. Assalamualaikum warahmatullahi wabarakatuh, and good morning. It is a great honor for me to deliver on behalf of Director General of DGSM. This is a keynote speech at this very important forum, and I would like to first congratulate DGSM and also DJKN Muda for this arrangement, and I think this is very important forum. And also I would like to thank the World Bank and team, Pak Greg Fowler, for supporting DGSM of this webinar, and I hope you all are enjoying your stay in Jakarta. I also would like to recognize the great effort of DGSM Youth atau DJKN Muda who have worked very hard to prepare this webinar, and also particularly in conceptualizing its substance. Distinguished participants, the importance of public asset and services to drive sustainable economic and social development in every country in the world. Investment in road, for instance, in developed countries, can transform the community to increase the well-being and to the growth of their economies. Growth in infrastructure and public asset can also lead to increased risk of disruption, particularly where key assets are highly exposed to the extreme event, in particular, like school, hospitals, and critical infrastructure networks such as power, transport, and water are especially vulnerable to damage and disruption, particularly those that arise from climate and disaster. Ladies and gentlemen, infrastructure is an essential ingredient for the success of a modern economy that positively impact the output, productivity, and long-term growth. Investment in this critical public asset usually large and long-term commitment, and this usually a major financial decision for government, especially in countries where resources are scarce and the development need stronger. This investment therefore need to be protected by ensuring the assets are maintained and are resilient against a variety of risks. Ladies and gentlemen, Indonesia is one of the world's most natural disaster-prone areas and is at risk to multiple hazards, including flood, earthquake, landslide, tsunami, tsunami, volcano, and cyclone. Disaster risk is one of the most important to protect against, given the significant damage that can be caused, that can have impact to asset, and also make disruption to critical infrastructure that can hinder the economic growth. The impact of natural disaster on public asset is one of the major sources of fiscal vulnerability, especially in developing countries. That's why because disaster can damage and make disruption to a wide range of infrastructure system and services. For instance, in APEC economy, damages to public asset from natural disaster are estimated to account for around 10 to 20% of total damage and can amount to 70% in exceptional case. In 2019, World Bank revealed that damage to power generation and distribution and transport infrastructure alone can cost about 18 billion US dollar a year in low and middle income countries. The bigger problem in terms of macro fiscal, economics, and social impact of disaster is the disruption to infrastructure services. Altogether, disruption caused by natural hazard as well as poor maintenance cost household and firm at least 390 billion US dollar per year in low and middle income countries around the world. Ladies and gentlemen, therefore, government consider to insure its public asset, to insulate its planned budget allocation against significant shock or disruption following a major catastrophe, which would otherwise require a reallocation of budget items. In Indonesia, we have signed the agreement with a consortium of 56 insurance company to protect state assets against natural disaster and other major risks. This agreement will cover ministry and institutional building in Indonesia against the structural damage until 2023. Despite the risk of disaster in many parts of the archipelago, Indonesia insures state asset because of the difficulty in determining premium based on different risks in more than 70,000 islands. We hope if something risky happens, we can claim for reimbursement and we can speed up recovery. This is also mitigates our risk. Insurance is a central component for protecting public assets against this disaster risk that enhance government financial resilience through risk transfer. By having at least some of the necessary funding in place after a disaster, asset which is covered by insurance will typically be repaired or reconstructed more effectively compared to unprotected public infrastructure. This is especially relevant for developing countries. Moreover, once the government has certainty about the available funds, it has much greater flexibility in planning repair or reconstruction effort based on different needs and priorities. For instance, the funding could be used to build back better, that is, repair or reconstruct the structure to a higher standard, and so in so doing, which is increasing long-term resilience of the public asset or infrastructure. Asset repair or reconstruction also can proceed more quickly when there is an insured source of funding for at least a portion of the losses. Ladies and gentlemen, distinguished participants, I believe this webinar provide a valuable contribution to the approaches and methods being developed by DigiZam in minimizing and mitigating the risks that affect public asset and infrastructure. I do hope that our webinar today will provide us with useful insight, also greater understanding of the option and benefit from insurance as an important component of broader fiscal resilience strategies. For the cooperation during the assistance provided by the World Bank, we hope it can help the most vulnerable countries, including Indonesia, to address some of the fundamental questions we face when considering strategic decision on how best to protect their critical public asset. We look forward to continuing our cooperation in this critical area through the ongoing development of open knowledge sharing that will form valuable contribution to the public good and support our dialogue with country partners on financial resilience. Again, thanks to the World Bank. Thank you very much for your kind attention, and I hope the webinar will be a great success. And again, thank you for the distinguished speakers and also the JKN Muda and also to Pak Ses for make this webinar happen. Again, I hope this webinar will be a great success. Wabillahi taufiq wal hidayah. Wassalamualaikum warahmatullahi wabarakatuh, and good morning.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you, Bapak Yosef, for the very comprehensive speech. Ladies and gentlemen, now we have come to our main agenda, the session from our two distinguished speakers. All presentation and discussion will be led by our moderator, Bapak Fatur Berlianto or Pak Ito. First, allow me to read Pak Ito's short bio. So, Pak Ito pursued his undergraduate degree in management at Universitas Indonesia and master's degree also in management from Universitas Mercubuana. Bapak Fatur Berlianto is a long-time family member of the JKN. He served since 1998 and built his career from being an appraiser, human resources analyst, head of planning and designing application system. Until now, he is the head of General Division at the West Kalimantan DJKN Regional Office. Without further ado, ladies and gentlemen, let's welcome our moderator, Bapak Fatur Berlianto.
Hello, Mbak Lela. How are you today?
Hello, Pa. How are you?
I'm fine, thank you.
Thank
How are
you for
you, Mbak?
joining us all the way from Pontianak, Pa.
Yeah, quite sunny here in Pontianak. How about Jakarta?
Oh, it's a little cloudy here in Jakarta.
Really?
Thanks for
Okay.
asking. But I guess seeing the bright faces of our attendants really brighten up the day.
Okay, thank you, Mbak Lela.
Okay, Pa. Without further ado, we will turn the time over to you and the speakers, Bapak Encep Sudarwan and Bapak Greg Fowler. The next session will be fully moderated by you for approximately 60 minutes. Pak Ito, the screen is now yours.
Thank you, Mbak Lela. Assalamualaikum warahmatullahi wabarakatuh. May prosperity and peace be upon us all. The Honorable Pak Yose Arifudito, Advisor for Direktur Jenderal for State Asset Commission, Bapak Encep Sudarwan, Director of State Asset Policy for Malaysia, Pak Greg Fowler, Crisis and Disaster Risk Finance Consultant to the World Bank, our colleagues from the JKN Muda, and all happy participants who were present this morning. Welcome to our webinar. Distinguished participants, as we know that our country is in an area that has a high level of disaster risk. In fact, almost all types of disaster that exist in
Kayak
the
Mas
world
Budi, kurus dari keluarga
also
jauh.
exist in our country. As Pak Joseph mentioned before, the growth of infrastructure and the public asset can also lead to an increased risk of disruption. especially if assets are vulnerable to extreme events. And if state assets are affected by disaster, it will have an impact on disrupting government service to all citizens. And as member of DJKN, DJKN Muda also, we need to ensure that our state assets remain available or can be replaced immediately after the disaster occurs. In this webinar, we invite two speakers, like Lola mentioned before. They will provide to us an overview of Indonesia experience in protecting state asset with insurance and how our neighbor country perspective view state asset insurance. All right, for time efficiency, let us start with our first speaker, Pak Encep Sudarwan. Please present his TV. Okay, thank you. Pak Encep Sudarwan, Director of State Asset Policy Formulation. He finished his economic faculty in 1991 at the University of Pajajaran and complete his master in business and financial economics at Claremont Graduate School, California, in 1998. Pak Encep has a long family history in DJKN as a Director of State Asset Management and Information System in 2013, as a Head of Director Regular Office in DJKN Jakarta in 2019, as Director of State Asset in 2017, and lastly in 2022 as a Director of State Asset Policy Formulation. And well, good morning, Pak Encep.
Morning, Pak Ito.
How are you, Pak?
I'm fine, but I'm sorry I'm in a hurry. Can we just start it, Pak Ito, at
Okay.
10:20 at 10:30? I have to speak in front of Ministry of Public Affairs, Public
okay.
Works. Okay.
Okay, thank you, Pak. Pak Encep, thank you for attending this webinar, for sharing your knowledge with our colleagues. Are you ready to listen, Pak Encep?
I'm ready.
Okay.
I'm really ready.
Okay, Pak Encep, we can wait for any longer. The screen is now yours.
Okay. Thank you very much, Pak Ito. Pak Jose, Pak Greg, and all others. Assalamualaikum warahmatullahi wabarakatuh. DJKN Muda, selamat pagi, good morning. How are you today? I hope you well today. And I'm sorry I have a short time because at 10:30 I have to speak in front of Ministry of Public Work. So I make it short just to inform you the basic knowledge and basics what we can do at the next years. Speaking about the insurance for our asset, why is it important? Pak Josi already mentioned that we have many assets. Can you, Pak Yudi, can you show us my presentation, Pak Yudi or Panitia? Go to page 3, please. You know, our asset is now 11,000 trillion in rupiah, and 60% of it is our asset. So it's 60%. I told you 60% is our asset. So this is very important. Why you have to go to insurance? We have to cover it. We have to protect our asset. Now we are in G20 countries, and hopefully in 2045, 100 years after our independence, our country will be in G7 or G5 maybe. We hope so, with our increase in our growth of economics. So this is very important. Why we have to protect our asset? Next page, please. This is, maybe you already know about this. This is very important as a DJKN member, that we have the cycles of state asset management. And you see in the right side, what we call risk management. This is our important, how to manage our risk. As already mentioned by Pak Jose and Pak Patur, we are in the danger zone. Pak Ito, maybe you remember when we were in Tokyo in World Bank session, I thought that maybe that is why Indonesian people are more religious than others, because we are in danger area.
Yes, sir.
So as we already know, there's the new paradigm that's already mentioned many times. That next page, that we want to move from asset administrator to asset manager, but still we are in the left side now. What we call is it's not easy to find the perfect, the fit word in English to tertib administrasi, tertib hukum, tertib fisik. It means then we have to protect, to safeguard our assets, and then we will move to the asset manager. But still, we are in the left side. Now we are in protecting our assets. Next page, please. This is our country. Maybe you already know. Let's go. Next page. See, maybe you are, some of you just watch this page. It's very important that we are in the bad area. I mean, the high potential for fault lines. And then next slide is this distribution of earthquake. You see, most of Indonesian area. And then go to the next page. Go on. I just to show you why is important. We have to protect our asset. Go on to the next page. Now, next page, please. This is the new picture of what just happened in 2021, last year. We have totally 5,402 bad thing happened in Indonesia. This data from BNPB, National Disaster Management Board. So you see 5,402 casualty happens in Indonesia last year. So what's the problem? Go to next. This is a very important page. There's a financial gap, huge gap between budget allocated and what really happens. There's a gap 7 to 8% between average annually contingency plan and average annual economic cost. So how to protect our asset? We have gap 78%. And still, even though this data is from 2017, it's still the same. That is why we launched the insurance for our asset to lower this gap. We cannot go to 1%, but at least goes to less than 50% by using insurance. It's not easy. You know what? The penetration rate in Indonesia only 3.4%. 3% the penetration gap in insurance in general. So that is why we have big gap between average annual contingency plan and average annual economic cost. This insurance for government assets is only a part of the whole insurance for our country. So by implementing this insurance for government assets, that's why Bu Sri Mulyani becomes the the best finance minister. There are 5 category. Why? 5 reasons why the Ibu Sri Mulyani become the best finance minister. In the fifth there are 5 category, and what the 5th category is that implementing insurance. So that's why Ibu Sri Mulyani very concerned about insurance for our assets. There is what we call DRFI strategy. Next page, please. This is our strategy. In general, when in the left side, this is frequency higher and lower, and loss higher and lower. And then at the left side, we have retention. It means that we can do it by ourselves with contingency credit, pooling plan, and budget allocation. But if the loss become increase and we frequency increase, also we can transfer to household insurance, public asset insurance, and then for the cover to our whole Indonesia, we will go to catastrophic insurance. So, but now we are in public asset insurance. We transfer some of our risk to insurance company. That's why we built the consortium of insurance company. This is the new thing. Even in the world, Indonesia is we are and World Bank appreciated what we have done, because this is the new model in the world. Indonesia implementing insurance for their assets, and it's quite different with other country. The model is quite different, but it's one of the best model in the world. Okay, let's go to the. I want to tell you steps to public asset insurance. Go to the next page. Why we can implement insurance for our asset? Everybody, when we meet in Tokyo, even in Cedric session in webinar in Cedric, everybody mostly asks to Indonesia, how can you do it? First, we have done asset revaluation. It's very basic, important thing, because we know how many assets we have, how much the price of these assets. This is, we have spent 2 years, more than 2 years, and audited by the Supreme Agency. Luckily, Alhamdulillah, we finished our asset revaluation. It's very important. And then, second step, we have regulation and standard. And then the third, we have policy standard. And then procurement system. We have a policy standard that one fit for all. You know what? Every client ministry, they only have one policy standard. So they don't want to go to many insurance company. It's only one consortium. They issue one policy standard. We have procurement system. We have insurance consortium. It's never happened in Philippines or other country. We have consortium insurance, and we have implemented. This is the basic step, and this is very important step. Why we can implement insurance for government assets. Why World Bank appreciate us? Not just World Bank, IMF, other international organization. Why we can implement our insurance? Because of this. It's not easy. It takes time. We are big country. We have at least 1 million unit of assets. 1 million unit of assets all over the world, not just in Indonesia. So next page. This is implementation of ABMN, and we are in, let's say, in early stage. From this year to the next year, we want to implement, what we call insurance deepening. We want to, until now, only 20% covered. So we want to increase to 50% cover the whole asset. and then they want to move to insurance for our cars, to vehicles. And then the biggest challenge, the next biggest challenge to how to insure our infrastructure. And that is why I come here now with the Ministry of Public Works. We want to discuss the insurance for public for infrastructure. This the three things, the biggest thing for the next year is how to increase our coverage from 20 to 50%, how to insure our cars, our vehicles, and then how to insure our infrastructure. I think this all for me the important things of our matters today, because time. Oh, last one. The next page. I told you no. Before this page, backward, please. No. The Indonesian public asset characteristic. Yeah, this is characteristic of Indonesia public asset insurance. This is the new thing in the world, and we are evaluate every year. And thanks to World Bank that has helped us to implement our asset, our insurance asset as insurance for our asset, and then they teach us how to, they help us to technically, and they prepare the system, and also how to teach the whole line ministry. I think Pak Ito, that's all for me. If there is a question, my colleague Pak Yudi will be here, and then I think I have finished with this session, because I have to speak in front of the Ministry of Public Works. I think that's all, Pak Ito. Thank you very much. Assalamualaikum warahmatullahi wabarakatuh. Yeah.
Waalaikumsalam warahmatullahi wabarakatuh. Ladies and gentlemen, distinguished participants, please give warm applause to Pak Ancep. Thank you very much, Pak Ancep. We note several important points, at least 7 points from Pak Ancep presentation. Unfortunately, he can't join any longer with us. So, number 1, Indonesia is very vulnerable to disaster. Number 2, insufficient APBN for post-disaster financing. Number 3, one of disaster financing strategies is public asset insurance. Number 4, he explained about steps to realize public asset insurance. Number 5, he explained too about the realization of public asset insurance since 2019 until today. And number 6, characteristics of public asset insurance that are different from other insurance, both in Indonesia or in other countries. And finally, number 7, he explained about future plan for public asset insurance. Thank you very much, Pak. Okay, I think we should go to the next speaker, Pak Greg. Please show his CV. Okay. Pak Greg Fowler, he served as a crisis and disaster risk finance consultant to the World Bank. He completed his study at Hart Valley Memorial College in 1986. He has a lot of experience in insurance area as account executive at Peterson Smith in 2002, as client advisor at Mars in 2003, as risk manager at Department of Correction, New Zealand in 2010, as senior commercial lead insurance at Ministry of Business, New Zealand in 2014, and as Director of Risk Management Solution in Wellington, New Zealand in 2020 until today. And he also has outstanding achievement as winner of the inaugural Department of Correction Gold Award for making a difference in 2012 by Management of Risk Practitioner Qualification Committee. Pak Greg, how are you, Pak? Pak Greg?
I'm very good, thank you, Pa Ito. I'm just trying to get my video to work. There we go. Thank you for the invitation. It's certainly an honour to be able to speak with the esteemed company here.
Okay, thank you, Pak Greg. Pak Greg, thanks for attending a webinar to share your knowledge for us today. And I will inform our participant here. Pak Greg gave a lot of knowledge and experience to the JKN in formulating public asset insurance policies. So I think it is also important for us, the JKN Muda and all participants, to gain knowledge and experience about the insurance as well from Pak Greg. I think, Pak Greg, are you ready?
Yes, I am.
Okay, Pak Greg, the screen is now yours.
Thank you very much. So again, look, thank you for the invitation. I certainly hope that everybody finds the presentation informative and useful. What I'm looking to do today is to give you an insight into some of the important components of insurance and how some other countries other than Indonesia have built their public asset insurance programs, because there are also some very important lessons learnt from overseas experience. And then we will look at how those components have appeared in the Indonesia program as well. What parts of overseas structures have Indonesia chosen to include in their program? And then finish off with I guess a view of why it is very important to protect public assets, not just for government, but for the nation in general. So if we could please share the screen for my presentation. And if we could move to the next slide, please, after this one. So the first section, I'm just going to give you a fundamental sense of what insurance is for public assets and how it comes together and why governments actually go ahead and do insurance for public assets. So let's move to the next slide, please. Now, what's really important to bear in mind is that a relationship with the insurance industry for government is a very strategic relationship. Why is that? It's because insurers are agreeing to take balance sheet risk for government. They're looking to buy government risk so that government has another means of funding should there be a disaster. So that's a very important relationship. In many other parts of the world, public assets insurance is bought for buildings and infrastructure. Large new projects. So if there is going to be a large new roading system built or big hospitals, and think of Indonesia's situation with the new capital, Nusantara. So there are going to be some large new assets being constructed. Motor vehicles and even aircraft and ship-going vessels can be insured as public assets as well. Of course, it all boils down to the coverage in the insurance policy. And an insurance policy will do a number of things if there is damage to the assets insured, including repair, replacement and reconstruction costs. And as you can imagine, that's a very important thing for governments because they want to make sure that they have the financial capability to rebuild assets after a disaster, because public assets deliver very important public services. So they need to be treated as a priority. Next slide, please. Now, why insure? Why not just pay for a loss when it happens from government funds or increased taxation? Well, one way to view insurance is that it's about swapping an unknown large future cost, the big silo in the red there, for a known cost every year, which is the insurance premium cost. So that makes it much easier for line ministries and the Ministry of Finance to budget, because they know that their cost for financial resilience, for public assets, is limited to their insurance premium and maybe some other funds, but they can budget and prepare for that and forecast for that year on year. But if they have no insurance, and as we heard Pa Encep describe, Indonesia is vulnerable to many types of natural disasters that can have a significant financial impact. And the thing is that you don't know when that is going to happen. Sometimes that can happen, for instance, at a time of COVID, when there are already budgetary constraints and it's going to be even harder to afford reconstruction on your own as a government. So buying insurance is a great way to be able to spread that cost over time and have another organisation, the insurers, assist you with the cost of reconstruction. Next slide, please. So how do you create a disaster risk financing program, and where does insurance sit in that? So you might have seen a much simpler table than this in Pa Encep's presentation, and this particular picture is made up of 4 boxes. On the vertical axis is risk retention. How much risk should government hold on to by itself? Above that is risk transfer. How much risk should government transfer to other parties such as insurers? And then along the horizontal axis, you will see short-term emergency response and recovery. There are some costs that are borne immediately. For instance, government might need to offer assistance in rescue services, in making locations safe, removing debris, supporting the food and accommodation needs of vulnerable populations who have been affected. Further across to the right is the long-term reconstruction area, and that's about rebuilding the assets themselves, reconstructing not only communities but public assets. And if you look at all 4 of those boxes, you can see that there are some what they call disaster risk financing tools and instruments. So if we look at the top right-hand box, we can see where public asset insurance fits, because the bullet point there, traditional indemnity insurance. That is currently the tool that the RBMM program uses to insure its public assets. But really what I wanted to show with this particular slide is that the creation of a disaster risk financing program, especially at a national level, is a bit like a jigsaw puzzle. It's a bit like selecting the right disaster risk financing instruments for each of these boxes so that you know you have a comprehensive risk financing program for your national risk financing needs. Next slide, please. So what we're about to look at over the next few slides is how other countries approach their insurance for public assets. So we're going to be looking at more of the right-hand side of the table that I showed you on the last slide. Next slide, please. Hello, next slide, please. So how does it work in other countries? So I'm about to walk you through 3 different nations. There is New Zealand, because I'm very familiar, of course, with the New Zealand approach. There is Australia, and there is the Philippines. Why have I picked those 3? Well, I've picked those 3 because they all take a different approach. And when we eventually get to the approach that the government of Indonesia is looking at long term, you will see a combination of all three of the strategies from these countries. And in summary, New Zealand agencies, government agencies, tend to act in isolation. So they almost always buy insurance for their property, but they do it individually with the insurance market. So they have not done what has occurred here in the government of Indonesia and under DJKN. They haven't come together collectively. They're still doing it individually as independent line ministries. Australia, they have created a version of DJKN. They have collected the responsibility for risk financing of public assets to one agency, but they self-insure all of that risk. They do not transfer it to the insurance market. I'll speak more to that in a couple of slides' time. The Philippines, they take a bit of a mixed approach. So they have also centralised their public asset risk financing arrangements, much like DJKN have, but they hold some of the risk up to 2 billion pesos per risk and only transfer to insurers after a loss exceeds 2 billion pesos. So as you can see, a bit of a mixed approach across those three countries. Next slide, please. So let's have a little bit of a closer look at the New Zealand arrangements. So as I mentioned, government agencies tend to engage with the insurance industry as if they were individual businesses. But there are some areas where government agencies have chosen voluntarily to come together. So they include the hospitals, which is the DHBs in one of the purple circles, the universities, the government scientific community, and what I was working on when I last worked in the New Zealand government was bringing together a mixed group of government agencies to come together and purchase insurance collectively. Now that was more about proving a concept that coming together has many advantages, not only for negotiation leverage with the insurance community, but also the possibilities to create economies of scale for government, to be able to create one procurement process instead of having to duplicate efforts, and also so that it gives the line ministries a chance to network with each other, come together as a community, learn lessons from insurance claims experiences, and learn lessons from their own disaster risk management environments so that they can all improve over time. There are some instances of self-insurance in New Zealand. So some agencies do choose to insure their own risks by using an internal fund and not transferring to insurance. And last but not least, in an ideal situation, the New Zealand government would like to move in a direction the same way as the Indonesian government is with DJKN, and that is a one government approach. Insurance is purchased by all agencies through a single arrangement with the insurance community. Next slide, please. Why is government changing in New Zealand? Why is it moving closer to something that the government of Indonesia is doing? Much like Indonesia, we are also exposed to a lot of natural disaster risks. You might be aware that we had some significant earthquakes about 10 years ago in Christchurch and Canterbury, but we also have volcanic risks, storm and flood risks as well. So, you know, nobody ever wants a disaster to happen, but when they do, they force government to think differently and ask themselves, do we need to do different things to protect ourselves and the public better? So these are some of the reasons why New Zealand is in the process of change. There were a number of surprises, a number of unexpected costs that came out of the earthquake experiences that government wasn't anticipating and hadn't funded for. there was a lack of coordination across agencies. So there was a lot of duplication of effort. There were key gaps in insurance protection. So when the line ministries had gone out to buy insurance, it wasn't consistent across government. Different ministries had different terms and conditions in their insurance policy. Some of the things that made us want to hurry up and move to a different way is that we saw the way other nations came together and handled their insurance collectively. We knew that we could create better negotiation leverage with the insurance industry. It would create more consistency and cost savings by using those economies of scale, and it would position government to make better decisions about risk management and disaster risk financing. Now, what's one of the key aspects to that is that when our line ministries go out and buy insurance individually, their data is also individual. So central government was not seeing all of the data aggregated in one place. And that meant that they couldn't understand what the national public asset risk profile was, and therefore they couldn't make wise decisions about how much risk they were actually bearing already. Next slide, please. So what direction is New Zealand going in? So if you look at the left side of the slide here, you can see this is all about long-term reconstruction of public assets. And if we move from the bottom of the left-hand side to the top, I'll explain it to you. So line ministries will still be expected to hold a little bit of financial risk, and they'll do that through budget reallocation when a disaster happens. Why are we looking to continue that arrangement, at least for a little bit of the risk? It's because if line ministries have a financial responsibility after a natural disaster, it means that they're motivated, they're incentivised to be prepared and look after their assets because they know it will cost them if they don't. Then what we will be creating a central agency, much like DJKN, who will charge a premium to the line ministries for insurance, but some of that premium will be retained and it will be pooled as a fund to pay for some losses when a disaster occurs. Sitting above that funded self-insurance reserve, the Ministry of Finance has indicated that they will agree to hold a layer of risk as well. So that's that layer of risk that goes between the funded reserve and the green wavy line. Okay. Now the Ministry of Finance will hold that layer as a contingent liability on the national balance sheet. Why is the green line wavy? Why does it go up and down? Well, above that green line, we will go and buy insurance from the insurance community, much like DJKN does with the consortium of insurers here in Indonesia. But in some years, insurance can be expensive. It just depends on global financial conditions and the position that the insurers are in when they price the risk. So when insurance is very expensive, maybe it's better that the more financially effective that the Treasury holds more risk instead of paying expensive insurance premiums. But when insurance premiums are cheap, maybe we transfer more risk to the insurers because it's financially sensible to do so. What you can't avoid is the layer at the very top. That's residual risk. So insurance will never cover absolutely everything in the worst case scenario. And government tends to be the insurer of last resort. So insurance policies have a limit, and insurers will only pay up to that financial value in the limit. So government will always have the layer at the top that they will be responsible in a worst case scenario, knowing that below that they've got protection. Next slide, please. So let's look at the Australian Commonwealth Government. You can already see just based on the, how empty the slide is, that it's a very different arrangement. So what does the Australian Commonwealth Government do? They charge all of the aligned ministries a premium, but what they do with that premium is they put it into a government account and they hold it as a fund, a self-insurance fund. They have built their own insurance policy and they share that policy with the line ministries so that the line ministries understand what is covered and insured under the self-insurance fund. The self-insurance fund covers damage and loss to public assets up to $150 million per event. The Commonwealth Government does not buy insurance. Why is that the case? Part of the reason is that the Australian environment means that they are a little less exposed to natural disasters than the likes of Indonesia and New Zealand. They have very few earthquakes, hardly any at all. They are not exposed to volcanic risk. Whilst they do have some flood risk and obviously wildfire risk, they're in a situation where they are less likely to suffer a large regional loss than Indonesia is. So they feel more comfortable in retaining their own risk. That doesn't mean that they haven't run into issues where a large event such as the Brisbane, Queensland floods a few years ago meant that they had to go to the Department of Finance and government there and ask for the fund to be topped up and replenished. They did used to buy reinsurance at the initial creation of the Australian fund. What they found is that after about 5 years, they had not yet claimed on the insurance. They recognised through their loss modelling that they have a different risk profile than New Zealand and Indonesia, so they elected not to buy insurance. That might hurt them again one day, but that's a decision that they've made. Next slide, please. The Philippines. So the Philippines have set up the equivalent of DJKN, and they call it GSIS, the Government Services Insurance System. They are doing many of the background activities that DJKN are doing, things like collecting good data. Collecting good data is important not only so that government can understand what to insure and how much to insure, but the insurers really demand good information as well and good data so that they understand what risks they are underwriting and accepting. So they are doing that. They've come together and created a procurement process for insurance because, like Indonesia, insurance is relatively new for line ministries as well. Like DJKN, they are also busy building a training and education program for line ministries so that line ministries not only understand what insurance is and how it works, but really importantly, they understand what to do when insurance claims arrive, what to do when there's a disaster that damages their property, how to engage with the insurers, what information do insurers need, and how to be efficient in the claims process so that settlements are received as soon as possible. The GSIS hold some of the premiums, a little bit like the Australian government does, so that they can afford to self-insure up to 2 billion pesos per event, but they also get an appropriation from central government every year to top up their needs. What GSIS also do is they transfer risk to the local and global insurance industry to cover risks above 2 billion pesos. You'll see that there's two components in the top line there, the National Indemnity Insurance Program. So that is a program very similar to the RBMN program. It's buying traditional indemnity insurance with the insurance community. That means that when there is damage, the damage gets assessed and a claims payout is made in accordance with the damaged the repair or replacement costs. But the Philippines also invest in a catastrophe bond parametric insurance product. What's the difference between traditional insurance and parametric insurance? Traditional insurance pays out, as I said, for damage to property to reinstate the property. So it requires evidence that the property has been damaged so that the loss can be quantified. Parametric insurance is a little bit different because it insures against an event happening. So you aren't saying, I want this building insured and then get a payout if it's damaged. You are saying, for instance, if an earthquake of 7 point on the Richter scale occurs in this particular area, I will get an automatic payment. So one insures against damage, one insures against a particular disaster event happening at all. Another key difference is that traditional insurance pays out once evidence of the loss and damage has been established. Parametric insurance pays out very quickly because it just needs to be confirmed that the earthquake has happened. And that can be valuable because, as we saw in one of the earlier slides, emergency response funds are required very quickly to help the population recover, to help line ministries recover. So parametric insurance can be included as a complement to traditional insurance to cover short-term cost needs and long-term construction costs. Next slide, please. So where is Indonesia potentially looking to go in the future? You can see that there is, and as Pa Encik mentioned in his presentation, Indonesia are really looking to be leaders. They're really looking to take different components of the various programs from around the world and take the best of them and include them in a single disaster risk financing approach in Indonesia. You can see at the bottom the reallocation of national and subnational budget. Again, like I said, with the line ministry reallocations in New Zealand, it means that government accepts a layer of risk. It makes sure that subnational entities and line ministries are accountable for risk management as well. But it also means that it's about the part of disaster risk financing costs that are affordable and predictable for government at the bottom. Then there's the pooling fund, a way to aggregate funds to come together specifically for disaster risk financing before you lead into a contingency loan arrangement and then into insurance transfer through the RBMN program at a point which government believes it makes sense because it can't or doesn't want to afford costs above a certain point. And above that, potentially further sovereign catastrophe risk to cover other risks outside of just public assets and into residual risk, that risk that government can't avoid. Next slide, please. So why is it important? There are 5 very important reasons which I will show you in the next slide. Next slide, please. Very quickly, economic, physical, social and fiscal resilience. Insurance provides money when you might not have it. It minimises opportunity costs. So if government has to divert funds to pay for reconstruction, it means it takes that money away from other very important policy agendas, including development agendas. It provides confidence for infrastructure investment. It means that that your partners in construction know that there's a safe and secure environment to invest in new infrastructure. It provides a competitive edge in global trade. So you are selling your goods and services internationally, much like other countries in the world. If they know that you're a country that is able to get back up on your feet very quickly after a disaster, that gives you a competitive edge when you are selling your products and services overseas. It means that you are a safe supply chain. And last but not least, looking after your people. Being able to repair a hospital and a school quickly changes people's lives. So fundamentally, it boils down to looking after the population, especially vulnerable populations. So that's it for my presentation. Hopefully you found it informative, and I'm more than happy to answer any questions at Pa Ito's discretion.
Okay, thank you, Pak Greg, for your exposure. Distinguished participants, give applause for Pak Greg.
Thank you.
Pak Greg, from your explanation, we have noted several important points, and I think it can also be used as a discussion material. Namely, number one, you explain about the background of the need of public asset insurance, the purpose of public insurance, like risk transfer, financial protection, and asset replacement, and the government behavior toward disaster financing. When the government bears the risk, transfers the risk, or combination of both. And the second is you explain about the comparison of public asset insurance in New Zealand, Australia, Philippines, and also Indonesia. And last, you give us 5 aspects important of financial protection of public assets. Pak Greg, I think there are not many topics from you, but I think it takes time to fully understand all of them. And I believe in the discussion session next, you can explain clearly every question from the participant. Okay, everyone, let us go to the last part of this webinar, discussion session, to explore and clarify various things about public asset insurance and comparison in other countries. We have, I think, we have 25 minutes to discussion. But before I give over to the participant to directly ask to you, Pak Greg, I think I have one question for you. From the last slide you shared, based your experience, Pak Greg, what Indonesia has done in insuring public assets compared with New Zealand, Australia, Philippines? What are the advantage of the method used in Indonesia, and what need to strengthen so that the protection of public asset in Indonesia is more perfect? Okay.
Thank you. Good question. So, first of all, you know, when I am consulting for the World Bank, most of the work that I do is across the whole Southeast Asia region. And I think it's fair to say that Indonesia has advanced their program much faster than your peers in the region. So first of all, there needs to be a lot of compliments provided to the team at DJKN, and also to your government leadership for seeing the importance of insurance at all. I think the government of Indonesia and DJKN have taken a very wise approach, because it's very difficult to inject change into government, not just for insurance, but any type of change is difficult in government, especially for a concept such as insurance, which is not familiar with many officials. So what DJKN have done is they've taken a staged approach. So as you might have picked up from Pa Enchep's presentation, is that they've taken a staged approach in 2 respects. they started as a small pilot with the Ministry of Finance, and they've slowly expanded participation. But they've also taken a staged approach in what assets are included in the program. So it's started out as office buildings, hospitals and schools, and the expansion plans are that it moves on to infrastructure, motor vehicles and other types of assets. I think that's a very clever approach. It means that you are dealing with a limited population of risk at the outset so that you can learn really valuable lessons before you move on to expanding the program. The other thing that allows you to do is to educate your customer, and in this instance your customer is line ministries, so that they're really comfortable that they know why they're insuring, how to insure and what to happen when a disaster occurs. In terms of the future aspirations of the program, I think that the foundations that have been set already mean that it is likely to be more successful when it grows.
Okay, thank you, Pak Greg. I think, yeah, I think that we can do that. Pak Greg, I see a participant raise her hand. Mbak Deborah, maybe host can. Okay. Mbak Deborah, can you tell us your name, your office, and give us brief question?
Okay, thank you so much, Pak Fatur, and good morning to Mr. Greg. My name is Deborah Siburian. I'm one of the delegation in DJKN Muda 2022 from PKKN Serang. It's a very great presentation. Thank you so much. I have two questions for you, Mr. Greg. The first one is I ever read in my in one of the paper about public assets insurance in New Zealand, and they stated that the biggest reason why public entity have no insurance is because the cost of insurance is higher than the assessed risk. So my question is, what consideration comes to the conclusion that one asset risk is lower than the insurance cost? And then the second question is, I think in today's world, the loss of data could cause one business a huge loss. So in terms of state database, what do you think about protecting a state's database with insurance? And is it already done in New Zealand? Thank you so much.
Yeah, two interesting questions. So in New Zealand, you might have picked in my presentation, there were some or very few instances where government agencies elected not to insure. One of those was the New Zealand Transport Agency. Okay, so they're the agency responsible for roading infrastructure. So they have a different mechanism for insurance or for funding disaster losses there. So when I fill up my petrol tank in New Zealand, I pay taxes on top of the cost of the petrol. Some of those taxes go directly to the New Zealand Transport Agency to fund new projects, to maintain the existing roads, and to set up a fund for disaster response and reconstruction. So they have a self-insurance fund. So whilst they don't necessarily buy insurance from the commercial insurance community, they do have a form of insurance in their own fund. They also have an arrangement in law with central government that if their fund is not enough to reconstruct after a natural disaster, that the Treasury will replenish some of their fund and assist them. However, what's really interesting is with the growth of electric cars, fewer people are filling up their cars with petrol, which means less tax is going to the transport agency. So now the transport agency is looking to go and buy insurance because they can't rely on enough funding for self-insurance anymore. And are they going to insure all roads? No, what they're doing is they're looking at data very carefully to understand what are the more important roads, what are the critical roads, including the bridges and the tunnels, and they're preparing to go to the insurance market to insure those assets. Your second question is about insuring IT systems, is that correct?
To protect the state's database with insurance.
Yes. So there's two parts to that. There is hardware, all of the computer hardware, and there is the software. Okay, all of the data and the software that supports the use of the data. So in terms of the hardware, yes, most line ministries insure the hardware as part of their contents insurance program. Okay, so they buy insurance not just for their buildings, but for all of the contents inside the building as well. For the software, so cyber risk is, as you will be aware, a big issue worldwide. Not all line ministries, but many line ministries buy cyber risk insurance, so that if there is a loss or damage because of a virus or hacking or phishing or some other third-party attempt to get into the program, then that would be insured. But also if after a disaster they have to restore data and restore software, there is coverage for that there as well. But I would say that the amount of agencies, government agencies that buy that risk in New Zealand would be about 50%. So, and the amount of agencies that buy property damage insurance would be 95%.
Thank you so much.
Okay, Mbak Deborah, is that enough for you?
Yeah, that's super enough. Thank you.
Okay, thank you. Okay, thank you, Pak Greg. Thank you, Mbak Deborah. I think the next question I will read from Slido, Pak Greg. In Slido, the first is, how can the insurance industry provide an appropriate insurance product to cover government's need? And is it possible to create such a tailor-made product, Pak Greg?
Absolutely. So, you know, when we think about when we go and buy products and services ourselves, we go into a negotiable contract arrangement. When businesses procure the services of an accountant or a lawyer, they negotiate the contract terms and conditions with certain key performance indicators and service level agreements. I think what a lot of people don't realise is that insurance can be treated the same way. As an individual house owner, if I buy insurance, I don't have much leverage. The insurance companies have more leverage to dictate the terms of the insurance policy. But as a government, you certainly have a lot of leverage to go into negotiations with insurers to create an insurance policy and agreements that suit your needs as well as the insurer's needs. And so, for instance, more recently, DJKN went back to the insurance consortium and negotiated service level agreements and claims process arrangements so that they are aware of the timelines. You know, there were set timelines to get certain parts of the process achieved. So, you know, it really suggests that it is a negotiable document that you can customise and compromise with the insurance industry on.
Okay, thank you, Pak. The conclusion is possible, Pak Greg, yeah?
Absolutely. Not only is it possible, but I think governments are obliged to negotiate with the insurance community.
Okay, thank you, Pak Greg. I think I need one participant for next question. We still have 10 minutes. Anyone? Anyone can raise hand to ask directly to Pak Greg? Host, can you share the question? Okay. Go on, Pak. tell your name, your office, and brief question.
Good afternoon, Mr. Greg and Mr. Fajur. I'm Dito Fajar from the National Narcotic Board. And in your presentation, Mr. Greg, I've heard that you could insure motor vehicle. And I'm wondering, is that a wise step considering motor vehicle tend to depreciate in value and not unlike buildings like hospitals and office buildings and school that tend to go up in value, and since motor vehicles are easier to replace. Thank you.
Thank you for the question, and it is a good one and an insightful question. So motor vehicle insurance is written under a different insurance policy than building insurance. And so the motor vehicle insurance policy has terms and conditions of coverage that reflect the nature of motor vehicles. Motor vehicles tend to have more accidents. They move around, they crash into each other. So they're a type of risk that the insurers treat differently than buildings. They're a type of risk that the insurers treat differently in the value of loss as well. How can you insure a vehicle from a value perspective? Ideally, when it comes to buildings, you want to insure for replacement value because you want to know that if that building is destroyed, you can rebuild it, because that's the important thing. Motor vehicles are a bit different. Motor vehicles, the typical value insured is its current market value at the time of the accident. Okay, so you touched on it before, it's depreciated value. So if I have a car that is 5 years old, I'm not going to get a claim settlement that reflects buying a brand new car. It will reflect what the depreciated value of that vehicle is. There are exceptions. So again, government and other large institutions can negotiate exceptions so that if government has unusual vehicles in its fleet, like ambulances and fire engines that require a lot of customization, they can come to an agreement with the insurance industry that they do insure for replacement cost. But for most normal motor vehicle fleets, it's depreciated cost.
Okay, thank you, Mr. Greg, for your insights.
Thank you. You're on mute there, sorry, Paito.
Okay, thank you, Pak Greg. Sorry, I'm with my Zoom. Okay, Pak Greg, for next question, I think I will read from Slido. The question is from anonymous, so I can show your questioner. Between the indemnity and parametric insurance, which one is better to cover the risk of public asset? I think this is a basic question, Pak Greg, for insurance.
Yeah, it is a good question. So with indemnity insurance, you know with greater detail what you've got insured and how much a payment will be. So you've got a better guarantee that you're going to get the finances that you need when you need it. Okay, where parametric insurance pays out only an agreed lump sum at the outset, so it might not be enough to cover your losses. Okay, where with indemnity you can predict that it will cover your needs much better. Parametric's better because it pays out faster, so that if you need those funds early to assist with emergency recovery, that's really valuable. But if you try to insure a very large value under a parametric program, it is one, doubtful that the insurance community would want to be involved in that arrangement, and two, even if they were prepared to have a very large lump sum in a parametric insurance arrangement, I think it would be unaffordable for government. It wouldn't make good sense. So indemnity insurance is better for public assets insurance because it gives you a much better guarantee that not only will you be able to replace the public buildings, but that you will be able to reinstate those important public services delivered through those buildings.
So the answer is depend on the purpose of the interest. Okay.
A perfect program is a combination of both.
Okay.
Yeah.
Thank you, Pak Greg. Okay, for next question, I think anyone want to ask directly to Pak Greg? Oh, maybe.
May I, Mas Fatur?
Okay. Okay, good. Please tell your name, Bu, and from office, where from office, and the brief question.
Thank you. My name is Birini. I'm from DJKN also, but I'm from different directorate. I'm from the separated state income, where I have function with the government investment. One of them is investment to the public entities, which will manage the pooling disaster pooling fund. Sorry. So the concept of disaster pooling fund, maybe correct me if I'm wrong, is try to lessen the pressure to the state finance, in which in the future it is expected that the spending, the budget spending for the maybe the reinstatement of the asset will be shifted to the fund. So I'd like to have your experience from those countries which you have explained earlier, which country has quite successful in terms of if we can say, try to lessen the stress or the pressure to the set budget, when there is a disaster in their countries. Maybe my question is as simple as that. Thank you, Greg.
Thank you. So yes, funds are a good way to do a couple of things. One is to it's a good way for government to accept risk that it wants to accept, and to ring fence those funds financially so that it knows it has the financial capacity ring fenced for disasters, and it doesn't have to draw unnecessarily upon other funds which will divert or have an opportunity cost against other policy agendas. There is a very good version of a fund in New Zealand called the Earthquake Commission Fund, and that is where householders in New Zealand pay a levy to the government. It's collected as a fund, and it is administered by the Earthquake Commission. That commission has an obligation to it does a lot of loss modelling, so it understands what the financial impacts of different types of earthquakes could be, and therefore the call upon the fund in terms of cash. They make a well-considered decision about how much they should hold in the fund, and then how much insurance they should buy to protect the fund if a loss exceeds what the fund can afford. But the other thing that the Earthquake Commission does is it's charged as an investment manager for the fund as well. And so it has an investment program that comes into a number of different components. First of all, it must keep part of that fund very liquid for the immediate response to disasters, or to be able to afford the full response to small disasters. And then it has a different investment profile for less liquid assets that can be on call on a short to medium term, so that if the costs attached to a disaster are larger, then they do have the time to call upon additional assets through their investment program, all the way through to government bonds as well, that they can liquidate rather quickly if required. So it's not just a matter of investing the money received to create the fund. It's a matter of investing the funds as an investment instrument as well.
Okay, but only for earthquake disaster only, yeah?
In that instance, yes, that's correct.
If there is flood or maybe other disaster, it is not managed by this commission.
Oh, well, actually, I'll correct myself. So it is called the Earthquake Commission, but over time, the legislation has broadened so that it covers a wider range of disasters. So yes, it does cover flood, tsunami, volcanic risk, storm risk, and also geothermal risk, because we have geothermal issues in New Zealand with heat rising up through the ground and causing issues as well.
Okay. Do they also deal with the insurance policy closing? I mean, all the ministry which have a public asset will go to them, and then they will negotiate, and then they will arrange all the terms and conditions with the insurance consortium. So only one door for the insurance process, or how?
Yeah, that is a really good question. So at the moment, the legislation for the Earthquake Commission is about protecting households, people's houses. Okay. It is not yet expanded to include public assets. So that the journey that the New Zealand government is going on will go down one of two pathways. The one that I think will probably happen first is that there will be a separate fund established for public assets. Okay, so that there will be a separate investment mechanism, a separate pool of money to help as part of the program for managing disaster response costs. But over time, there is a possibility that the legislation will change so that the Earthquake Commission will be a one-stop shop as a risk pool for not just households but public assets as well. But if that happens, it's going to be several years before it does, which is why a public asset fund will probably happen first.
Okay, because yeah, it will need super consortium to to pay all the claims. Yeah, if bridges and all the roads are damaged, I think it's going to need a very large consortium to absorb all the claims. Okay, thank you, Fatur. Thank you, Greg.
Thank you.
Okay, thank you, Mbak Wirini, Pak Greg. Pak Greg, we still have 3 or 4 minutes. I think I will read a short question in the Slido. The question is, does Japan also apply this insurance asset, which is one of the country experiencing the most earthquake? Short answer, Pak.
Yeah, that's a good question. So Japan, it boils down to the ownership of assets in Japan, which is quite interesting. So central government is not a big owner of public assets. So most of the schools, the hospitals, the roading infrastructure is actually owned at a sub-national government level. Okay, and so the sub-national government do have a license to insure. Some of them insure collectively, some of them don't. But they do have support built into legislation from central government to contribute quite substantially to the costs of recovering and reconstruction after natural disasters. Up to almost 95% of the total cost, I believe, from memory. So whilst central government is not a key owner of assets, they are a key part of the financial response support to subnational governments. Just to add on to that part, Ito, the other thing that the government of Japan do quite well is that they are a big incentivizer of insurance. as a disaster risk financing instrument. They are involved in joint ventures with the insurance industry to make insurance available and affordable, so that it helps relieve government of its own disaster contingent liabilities if insurance is well used.
Okay, thank you, Pak Greg. It means they use it, but in different method, Pak Greg.
That's correct, yes.
Okay, thank you, Pak Greg. Pak Greg, I think the time has come for us to end the presentation and discussion session on public asset insurance today, and also the various issues in this webinar. Pak Greg, from the colleague from DJKN Muda, we thanks to you to present your knowledge here, Pak and all the questioner and all the participants who attended. Hopefully that we present and discuss this time is useful in completing the task in our respective position and adding insight. Before I give back to MC Mbak Lola, Pak Greg, would you like to give us a final comment, maybe?
Well, first of all, it's great to see such a large group come to hear about this subject. I think it's going to be big news for Indonesia, not just in terms of what's been created, but by how important it will be when a disaster happens. And we've heard from Pa Encep that it's not about if, it's about when. So I applaud the government of Indonesia. I applaud DJKN for all of the hard work and effort that they are undertaking. Sometimes the best things are the hardest things. And it's great to see that the government of Indonesia is not backing away from the hardest things. And it's been a real privilege to speak to everyone. Thank you for the opportunity.
Thank you, Pak Greg. I think it's time to give back the station to Mbak Lola. Thank you very much. And Assalamualaikum warahmatullahi wabarakatuh. Back to Mbak Lola.
Thank you very much. Thank you for Pak Encep who have left us earlier for his other schedules. Pak Greg, Pak Ito, and all of the participants for bringing us to a very productive session today. With the conclusion of our session, our meeting has come to an end. But before that, I would like to read some announcements to all the participants. First, don't forget to mark your presence in the attendance list. The link can be found in the chat box or on our link tree. Second, and I think the most important one, we are going to commemorate our wonderful meeting through some group photos. So ladies and gentlemen, I invite all of you to turn your camera on and flash your beautiful smiles. Our team will take the screenshot for the first Zoom gallery. Hold your smiles as I count 1, 2, and 3. All right, great. Let's move on to the second gallery. Ready? 1, 2, and 3. All right, thank you so much, everyone. Oh, I guess we have one more gallery to capture. All right, flash your beautiful smiles, everyone, as I count 1, 2, and 3. Very good. Ladies and gentlemen, on behalf of DJKN Muda, I would like to extend my gratitude for your active participation today. Roses are red, violets are blue. Today was great, and it's all thanks to you. I am Lolita Ramadian signing off, and we hope to see you again in our next event. Wassalamualaikum warahmatullahi wabarakatuh. Have a great rest of your day, and bye-bye.
Thank you very much. Thank you.
Satu tanya melayang di dalam benak tentang tanah dan bumi tempat kini ku berpijak. Surga dunia bernama Indonesia, anugerah terindah dari Sang Maha Pencipta. Gunung, sungai, hutan, lautan, samudra beserta kekayaan alam terkandung di dalamnya. Sebesar-besar bagi kemakmuran rakyat, komitmen kuat untuk sebuah amanah. Jalan, jembatan, bandara, pelabuhan, beraneka rupa wujud hasil pembangunan. Semua tiada akan pernah berarti bila kita tak pernah sadar dan mawas diri. Bergegas, bergerak kawan, satukan tujuan. Tak ada lagi waktu untuk berpangku tangan. Tanamkan janjimu pada ibu pertiwi, jangan pernah lelah cintai negeri ini.
Denyut nadi terakhirku sampai akhir nafasku. Ini uang kita, ini punya kita. Ayo kita semua jaga aset negara. Ini uang kita, ini punya kita. Ayo kita semua jaga aset negara.
Langkah demi langkah, pantang mundur. Perekonomian negara perlu diatur, menekan inflasi, mendorong pertumbuhan, stabilitas ekonomi. Tak sekedar harap rupiah, pajak terkumpul, dikelola secara cermat, tepat, be careful. Sedikit demi sedikit, pasti jadi bukit, agar anak cucu kita nanti tak jadi sulit. Aset negara bertumbuh dan bergerak, rawat dan jaga selalu, jangan sampai rusak. Integritas, profesionalisme, sinergi, pelayanan, kesempurnaan, menjadi jati diri. Bergegas, bergerak kawan, satukan tujuan. Tak ada lagi waktu untuk berpangku tangan. Tanamkan janjimu pada ibu pertiwi, jangan pernah lelah cintai negeri ini.
Denyut nadi terakhirku sampai akhir nafasku. Ini uang kita, ini punya kita. Ayo kita semua jaga aset negara. Ini uang kita, ini punya kita. Ayo kita semua jaga aset negara. Ini uang kita, ini punya kita. Ayo kita semua jaga aset negara. Ini uang kita, ini punya kita. Ayo kita semua jaga aset negara. Ini uang kita, ini punya kita. Jaga aset negara.